all of you on this one more episode of Financial Fridays by FFPAI. We are thankful to Finnovate for supporting this education initiative and making doctors finance savvy, because we all doctors are well versed in the profession that we are, but at the same time, we also need to understand and have the knowledge of financial markets and other things also to make uh, things planned properly and executed properly. Uh, Today we have got a very eminent speaker with us. So I will request moderator of today's program, our senior colleague and respected colleague from Mumbai, Dr. Vivakar Advari sir. Uh, Please introduce us to the speaker. Dr. Vivakar Advari sir, please.
Yeah. Thank you, Pragnesh. I have the proud privilege of introducing Madam Nehal Mota, the co-founder of Finnovate. She has done a postgraduate in management from Mumbai University and MDP from IIM Indore. She was recently selected by Goldman Sachs and NSRCEL IIM for 10,000 Women Entrepreneurs Program. She has an experience of over 2 decades across financial services industry, having worked with corporates like ICICI Prudential Life, ABN AMRO Bank, and IIFL. She is currently at Finnovate and she handles client acquisition, marketing strategy, team management, collaborations, and tie-ups. I invite her to improve our financial fitness on by talking on topics like basics of personal finance, how to bring down tax liability with smart income restructuring, and insurance planning based on regulators, guidelines, and your needs. May I invite Madam Mota, please?
Thank you so much for the warm welcome. Good evening to everyone. And I would like to really congratulate the Federation of Family Physician Association of India for such a wonderful initiative, which I heard that every Friday you all have a lot of educative sessions. So, once again, really congratulations on such a, I'll say like taking on this initiative going forward. And today, Dr. rightly said, that we'll focus on certain subjects of personal finance. And personal finance is very vast, understanding the basics and then, the taxation and insurance. So what we've decided is that we'll split this topic in, 2-3 webinars. So, going forward today, we'll really get the basics of personal finance right. Like what is personal finance? Why even understand personal finance, how to get started. We'll talk about all that. So without wasting much time, I think we'll just dive into the session on how we can make doctors financially fit. And I guess towards the end of today's session, the objective will be, how do you get started with your financial fitness? So once again, I congratulate the, association. We know this famous thing that Tamsoma Jyotirgamaya. So we want to take this session, which can take us from darkness of ignorance towards personal finance to actually light, to guide us to the light of knowledge. So moving on. Yeah, moving on, I'll just very briefly talk that we at Finnovate, we are a financial fitness platform. We empower busy and successful doctors across the country to build prosperity safely, surely, and swiftly. And we use the 6 pillars of personal finance, which is like the basics. So today I will actually focus on what the 6 pillars are. And we do all this so that the doctors can live their dream life without really having any money worries. And we have a lot of doctors join us on this mission, and we'll talk about it during the day. So moving onwards, financial fitness for doctors. So when I go as a patient to a doctor, he'll generally be talking about, certain vital statistics. Okay, what is your height? What is your weight? How is your BP? He'll ask me certain questions. And it's not that he'll give me a prescription and I'll get financially fit. Definitely, it will help me treat that particular thing for which I've gone to a doctor. But if I have to build physical fitness, all of you doctors always advise us that you need to eat right, a balanced diet. Don't get into any extreme fat diets like keto or other thing. આપણી Indian થાળી, શાક, ભાત, દાળ, રોટલી, એ બધું ખાવાનું, એ બધું જરૂરી છે. The balance of carbs, protein, good fat, everything. Then they really emphasize on a good sleep, staying stress-free, having healthy relationships. અને મને બધા ડોક્ટર્સ કે તમને એક્સરસાઇઝ કરવાની છે, 7 દિવસમાંથી 3 થી 4 દિવસ તમે એક્સરસાઇઝ કરો. So a doctor always emphasizes on a holistic, physical fitness. Same way, when we look at your finances, we emphasize on financial fitness. Okay, so ખાલી ઇન્વેસ્ટમેન્ટ કરી દઈએ કે આપણને બહુ હાઈ રિટર્ન્સ મળે. Would only investing and earning a high return mean being financially fit? Definitely, like physical fitness is about balanced diet, staying stress-free, basically exercise, and a balance of many things which helps us achieve physical fitness. Same way, there are 6 pillars in our financial lives. If we balance all that, that's where we can achieve financial fitness. Okay, but the whole idea, okay, why should we get financially fit? Okay, so this is an interactive session. I'll encourage all of you all to go to your chat box and really tell me કે આપણા જીવનમાં બધાથી જરૂરી ચીજ શું છે, જે તમારા માટે તમને લાગતું હોય કે આ મારા માટે બહુ જરૂરી છે. This is the most precious resource I have in my life. If you all can just go to your chat box and type, and if I can see some answers, it will really, guide me to like take the session forward. So what as per you is like the most important resource or most valuable thing which you have in your life? Okay, so a lot of people will say, okay, for me, family is the most valuable resource which I have. A lot of people will say my profession. હું ડોક્ટર છું, હું પેશન્ટને ટ્રીટ કરું છું, એ મારું પ્રોફેશન મારા માટે બહુ valuable resource છે. For certain people, money is a very valuable resource. But if you ask me, one thing which is the most valuable for all of us, it is our time. Okay, to be in control of our time, to have the time on our side. And when the time is on our side, to be able to make that choices which we can make because we have time on our side is our most valuable resource. And so we really tell people to build financial fitness because the whole idea is that while you have that time or you start getting in control of your time, so once you are financially fit, you are in control of your time, you achieve that financial freedom where you're only working out of choice, you have enough passive income coming in. એક ઇન્કમ આવે જ છે, પછી હું કામ કરું છું મારા પેશન માટે, મારું ટાઈમ મારા કંટ્રોલમાં છે, and I decide what I can do out of my time. And so why it is important for doctors particularly to achieve financial fitness, because India ma doctor patient ratio is very bad, and doctors really, if they are financially fit, then they're not worried about their finances and they can really practice, focus on their profession. They can practice without being really worried about their finances. And so we want to encourage doctors to build financial freedom and build financial fitness so that they can only then focus on one thing, is what they like to do the most or they love is treating their patient without being worried about finances. So moving on, a disclaimer that today's session is going to be only educative. There is not going to be any personalized, advice or any advice ke buy this, sell that or anything. It's completely educative. So moving on, what is financial fitness? So we'll talk about it. Say if you can maintain the lifestyle which you're living right now, all the doctors, if you can maintain the lifestyle which you're living right now for the rest of your life, without having to go to work, okay, that is when you achieve financial fitness. And it is not just about investing or earning a higher return. There are 6 pillars. So today we will talk about that 6 pillars. We will understand how can doctors be financially free. So what is that FIRE number? What is that number where doctors will achieve that financial independence? And I say doctors don't retire, okay, but retire from money worries, okay, and only be able to focus on their profession and their family, and not really worry about finances. So we will look at that. And then we'll also try to understand what is that formula which can help doctors create wealth. So moving on, the first thing which you need to understand is that how do you get started? The first basic of personal finance is understand what goals you have. Okay, knowing that I have this goal, that if I have to maintain my current lifestyle, I need 1 lakh a month or 3 lakh a month or 5 lakh a month. To each one, its own number, depending on number of family members you have, the lifestyle which you have. So to each one their own. So the first thing in personal finance, the first basic which you need to get is understand what are your life goals. Now, just knowing the goals, but not knowing the process or the system of how to reach the goal, that will also not work. So a lot of people are very methodical with their investing. They understand mutual funds, stock, bonds, FDs, all different asset class. So એ લોકો પાસે સિસ્ટમ છે, પણ એ લોકો પાસે ગોલ્સની ક્લેરિટી નથી. તો ખાલી ગોલ્સની ક્લેરિટી ના હોય ને તમે ખાલી ઇન્વેસ્ટ કરો, તમારા પાસે સિસ્ટમ છે ઇન્વેસ્ટમેન્ટની, તો that doesn't work. What is the best combination? કે તમારા પાસે તમારા ફાઇનાન્શિયલ ગોલ્સ પર પહોંચવાની ક્લેરિટી હોય અને તમારા પાસે એક સિસ્ટમ હોય કે તમે ગોલ્સ પર કેવી રીતે પહોંચો. So the financial fitness is all about understanding your life goals and then creating a system, a systematic way to reach that life goals. So moving on, the 6 pillars of financial fitness. What I told about, if you and your family want to get financially fit, then you need to balance goals. What I talk about, ke pella investment shuru karwathi bhi pella, you need to fix the goal. Like I'll tell you my example. I went to a doctor that, I want to really maintain my height and weight. I am a little in BMI on a little higher side. So doctor said very clearly કે શું goal છે? તમને કાંટા પર વજન ઓછું કરવું છે કે તમને genuinely fit થવું છે? મેં કીધું મને genuinely fit થવું છે. So he said that our goal is to lose 10-20% body fat. Our goal is to get into a certain BMI. That is what our goal. Now we will work on what you need to do daily basis, the process. Okay, so same way, when you want to achieve financial fitness, understanding the goals, એક goal સમજાઈ ગયા પછી એ સમજવાનું મારી income expenses શું છે, so budgets અને taxation. The most important thing is that once you understand how to bring down your tax liability, you will have more money to save. So the second pillar is budgeting and taxation. The third pillar is investing. ઘણા બધા લોકો goal planning કર્યા વગર, budgeting અને taxation સમજ્યા વગર ખાલી investments માં jump કરે. So investment comes third or it comes much later. Then also insurance planning. કેવું insurance લેવું, કેટલું લેવું, till what time should you take? So that also is very important. Loan management, every person or every family's goal is that I want to pay off my loan and I want to get debt free as soon as possible. And last but not the least is the estate planning. Only doing investments without understanding that I should do individual account, joint account, should I have a will or not? What is the right time to have a will? What if something happens to me? How will this wealth get transferred to the people whom I intend to? So when you balance these 6 pillars, goals, budgeting, taxation, investments, insurance, loans, you have a plan to get debt free, and estate planning. When you strike a fine balance between all this, that's where you can call yourself being financially fit. Okay, moving on. Now this sounds very easy. I need to balance the 6 things. How do I balance the 6 things? So over the last 2 decades, we've built a framework. Okay, how should you go about doing this? So the first thing is that you lay a strong foundation in your personal finance. And that is what my objective for today is. Okay, how do you lay a strong foundation in personal finance? So the first thing is you discover where are you today. So through one exercise or through one quiz, we will see today where do we stand. We will discover our financial fitness, or we will discover our goals, we will discover our FIRE number. That will be my objective today. Then you need to audit whatever investments you've done till today. Is it right, wrong, individual, joint? What is a CAGR return? So when I go to a doctor, the first thing is they give me certain tests and there is a diagnosis. So audit of your current financial fitness is like a doctor's diagnostic. And the next and the most important thing is creating a financial plan. So our today's session, we will focus on laying this foundation. So I said that the 6 pillars you can balance through a process or a framework which we have created. The foundation of this framework is discovery, audit, and plan. We'll talk about it today. In my coming sessions, in the other webinars which we'll do after this, we will then focus on risk mitigation. So how can we really plan right insurance, optimum insurance, so that risk is out of our life? The next after that, we will learn about asset allocation and how to construct a portfolio. What are like the asset classes? How do you decide where to invest? So we will then, in subsequent sessions, look at that. We'll also discuss how do you automate all your investments. So the process, what process do you need to put in place? This all goes on an auto mode. After that, your work is to actually monitor your financial life every quarter, rebalance. And last but not the least, when you have gone through this 9-step process, in the end, the power of compounding works for you and you reach financial fitness or financial freedom. So there is an entire process or steps to really reach from where we are today to actually achieving financial fitness. Okay. So we'll now begin that, how do you achieve financial fitness? So the first thing which you need to understand, what is your FIRE? Okay. So what does FIRE stand for? FIRE stands for that number when you achieve financial independence and you are actually prepared to retire early. Now, retire early does not mean retire from work. It is actually means retiring from really focusing on income. Even if the income is up or down, still your lifestyle can be maintained. So understanding what is a FIRE, it is a movement which is gaining a lot of importance right now because everybody wants to reach that point of financial freedom in life. The goal is that you save and you invest very aggressively initial in your life so that you can hit that FIRE very soon. Okay. And the key strategies of FIRE is that you understand what you own. You try and push your savings very high in the initial years of your career or your practice, so that you can reach that FIRE number. You live a little frugally and you try to create multiple sources of income. So moving on, let's today do a very practical thing, that what is that FIRE number for you? So I'm giving you an example, then we will do a very practical session also. Say a doctor is 40 years old and he says that for me to maintain the lifestyle which I'm living right now, I need 1 lakh rupees per month of income. He says that my life expectancy is 80 and the inflation is 6%. So in today's terms, say if the doctor is 45, then he needs a corpus of 5 crore. If he has a corpus of 5 crore, then he can get that 1 lakh rupees inflation adjusted income from his age 60 to his age 80. So right now I'll go to the life system where you all can just put in for you to maintain your lifestyle, what is the kind of income which you're looking, or what is that expenses or which are needed. So if you all can just put in the chat box that what is that monthly income you want to plan. So we will look at what your FIRE number is. And in this, you will get the steps to calculate that FIRE number, that number which can give you financial independence. Okay, so if you all can just put in your chat, and if Chintan, you can read what numbers people are putting in the chat, and just like unmute and tell me from the YouTube, chat box, what numbers people are talking about. So we learn how to calculate the FIRE number.
Sure.
Advari sir can guide. Sir, you can give the numbers to ma'am.
Madam,
Sir is our financial wizard.
Oh, very nice. Good to know that.
Madam, there is one person whose current age is 30. He wants his retirement age at 55.
Perfect.
Life expectancy 85, and inflation he has put as 7%.
Right. So what monthly income or expense they are putting that can help them maintain their lifestyle? So like I'll ask you, Dr. Vibhakar, what do you feel a doctor's family, if they get this much monthly income, then they can maintain their lifestyle for the lifetime? If you can give me any number.
He expects his monthly household expenses to be 1 lakh
This
per.
is what we have put in the chat. If people are putting, Chintan, if you can give me the number, or Dr. Vibhakar, you can
Sir,
independently
what do you
give
think
me a
could be the
number.
reasonable amount? The reasonable amount in your mind, sir?
Yeah, audience also, please, you can put on chat box.
If he's 30 and
No, it's not 30. The doctor could be 40, 50. I'm just saying if a person is 40 or 50, what is that monthly income which if he gets, then he can say, I can maintain my
The
lifestyle.
minimum monthly expense in any city is around 50,000 rupees, just to have a standard life. I'm not talking about luxury.
Depending upon his lifestyle, it would be anything between 50,000 and 1 lakh per month.
Yes.
Okay, fine, sure. So I'm just taking an example of 1 lakh per month.
And maybe you can change the age to 50 because all the we have got very the audience is almost all matching the standard. Yes.
Perfect. So we have taken if there's a doctor whose current age is 50 and say to maintain his lifestyle, he needs 1 lakh rupees per month. Retirement age, Dr. Pragnesh, can I assume 65 or 60?
70 doctors work longer.
Doctors will work longer, but a point where they are financially free, then they work out of choice, but not out of compulsion to earn money. So I'm just taking like 60.
The standard age of retirement you can keep. Yes.
Perfect. So we are taking the standard age of retirement is 60 and life expectancy 85.
Yep.
Because doctors are fit and they can take care. Yeah.
Audience member wants 150 in monthly expense, including travel. So just we can change that one.
Including their vacations and everything, they want 1.5 lakhs per month. Perfect.
Yeah.
Okay, and
foreign travel, not just national travel.
Yes, the foreign travel. So I guess 1.5 lakh per month. So annually 18 lakh rupees is what as a passive income they are looking at. Now inflation. What do you feel as doctors that is an inflation? Like agar aje maru kharcho mahina no 2 lakh છે અને મારે ઈ lifestyle maintain, if I want to maintain my lifestyle, then what is the inflation? If you can give me an idea.
Since last couple of years, it has been less than double figures, and we wish that it continues the same way.
Right. Okay, fine. So see, generally the published inflation number is between 5 to 6%, but generally that is food inflation. It does not have fuel and it does not have our lifestyle expenses. So I'm assuming it's 8%. So if say inflation is 8%, so first thing which we need to understand, a rule of 72. 72 divide by the number of inflation. So I have taken inflation 8%. So 72 divide by 8, the multiple is say 9. So if today to maintain my lifestyle, I need 1.5 lakh rupees a month and I'm 50, then at 59, this 1.5 lakh will become 3 lakhs. Okay, 9 years from now. Again, 9 years from then, the 1.5 lakh will become, say, it has become 3 in 9 years. It will become double of that 6 by say age of 67 or 68. And then by 75, 76, this number will grow to 10, 12 lakh rupees a month. So we feel 7-8% inflation, what will it make? It will actually mean that your expenses will keep doubling every 8-9 years because of inflation. So now if a doctor at the age of 50 wants 1.5 lakh rupees of monthly income, he wants to retire at 60, or I will say he wants to attain financial freedom at 60. Life expectancy is 85, inflation is 8%. So his FIRE number at the age of 60 is 8,70,85,000. So by the age of 60, the doctor should have free financial assets of 8.7 crores. So this does not include his hospital where he's practicing or his clinic. It does not include the house which he's staying because that is for end use. Only his investments which can give him like a regular income. So 8.7 crore is that number which the doctor needs to reach. Now to reach that number, there is certain monthly savings which he will need to do. So the first thing, the basic of personal finance is understanding what is that FIRE number, which will help you achieve financial independence. So I did a working for 1.5 lakh. If you all have, any more 2 lakh, so I'll like do a little changes. Say if someone says, I don't want 1.5 lakh, I'm okay with 1 lakh. So I'll just reduce this to 1 lakh. Then the FIRE number is 5.8 crore. They just need 6 crores by the age of 60, free financial assets, which will generate them inflation adjusted, 8% inflation adjusted. Today is 1 lakh till the age of 85. Okay, now someone says, oh, I will take 3 foreign vacations from the age of 60 because then I am financially free, independent. So I'm not really worried too much about practice. I need 2 lakh rupees a month. So I'll just change this number to 2 lakh. Then they need to create a asset or a net worth of 11.61 crore. So the first thing which you need to do in personal finance is figure out what that FIRE number is for you. In fact, the day we start working, if we have clarity of our FIRE number and that small number of savings we keep doing towards our FIRE, we can achieve FIRE much earlier in life. So with this, I'll move on to the next thing. I know the FIRE number, 11.6 crore. If I need 2 lakh rupees per month.
Just a second. One of our audience member also wants to see what is the impact of inflation if we reach it to 12%.
Okay, perfect. So very good question. Say if, so he wants inflation what?
12%.
12%.
Oh, 12%. So if you want 2 lakh rupees per month, you are 50. And by 60, you want to achieve FIRE. Life expectancy is 85. And I've taken inflation 12%. Whoever has said 12% inflation is very practical because we are only taking food inflation. But Emma, if you add fuel, you add your lifestyle, then, and if you add medical expenses, okay, the inflation is highest in medical expenses. Okay, so 12%, then you need to reach this number, which is 16.7 crore. So at 8% inflation, go to the 8% inflation. At 8% inflation, this number was 11.6 crore. At 12% inflation, this number is 16.7 crores. Okay, so 4 crore got added, 4 crore plus with a change in inflation number. Now, if life expectancy, if I say I'm very fit, I'm doctor, and the way medical science is improving very fast, say if the life expectancy is 90, just can you change the life expectancy to 90? And can you change the inflation number back to 8? Okay, then in that case, that 11.6 is gone to 13.6 because you will live 5 years longer. And I will plan for the best. Like I'll plan for the maximum life expectancy. Then, if in case, life is short or something, I'd end up leaving a legacy for my family. Okay, so this is how the starting point of personal finance is calculating your FIRE. Now, how to achieve FIRE? FIRE पर पहुंचूं केवी रीते? How to reach that 13.6 crores? Okay, so to reach that 13.6 crore, if you just go down, say till now I have just invested in property and I do not have any great financial assets. So I have taken till date, you don't have anything for the FIRE or for your retirement. So I've taken it 0. Now you tell me that yearly you are saving 5 lakh rupees, or I will just change it to say yearly 10 lakh rupees. Annually you're saving say 10 lakh rupees. Okay, then and say you are increasing your savings by, say I am saving 10 lakh every year and I'll increase it by 10%. Okay, every year. Then in that case, you need to earn 42% return on this 10 lakh rupees every year to reach that FIRE goal of 13.62 crore, which is not practical. Okay, you can't save 10 lakh rupees a year, increasing by 10% and earn a 42% return. That's not practical. So actually, what do you need to save to get to that FIRE? So if you all put in the chat box, what do you feel is a reasonable rate of return? Okay, this much return is practical and we can consistently earn that return. So if you all can just put in chat box, what is the kind of returns which you feel is practical. Chintan, you can read that number from the chat and let me know. So I'll do a lot of permutation combination that how to collect that FIRE corpus.
Sure. Audience member, please, the reasonable rate of return.
Yeah. What do you feel, Kate? This much return is very practical.
Madam, you'll have to take the risk factor also into consideration when you say
Perfect. So
that.
risk-adjusted returns. Okay, after adjusting for risk, this is some reasonable returns which I can get. So I will say that our Indian markets are compounding at about 15% every year. I'm talking about index. Okay, it is compounding. So if I were to just assume that kind of a return, so Pranav, if you can just change the yearly savings number. If you can just change the yearly saving number. Yeah, take it to, take it up. Yeah, somewhere around. Yeah. So if you see 15% is what the index in India has given over the last 30 years, which is a very, I'll say a decent kind of a return which you can expect. So if the expectation of return or that consistent CAGR is 15%, then annually to get to that FIRE goal of 13.6 crore, the doctor at age of 50 has to save 40 lakh rupees per year, growing at 15%. Then by 60, he collects 13.6 crore and he achieves financial independence at 60. Now, after 60, he will keep getting 2 lakh rupees per month, inflation adjusted from the age of 60 to the age of 90. Okay, if he goes to practice, it is out of choice. He doesn't go to practice. He practices for philanthropy. He does whatever. He will be getting inflation adjusted 2 lakh rupees per month from the age 60 to the age 90. And for that, 40 lakh rupees every year he needs to save for the next 10 years at a 15.3%. Now let us see if the return is not 15.3. If you're only getting 12%, then what will happen? Okay, so drop the returns to 15, say 12%. Okay, so if you are only getting say 12%, then instead of 40 lakh, the saving number goes up to 48. So you need to save more at a lesser return to still reach that goal which you had, because FIRE number, that 13.62, you have to reach anyhow. Now, either you increase your savings or you really handle your money in such a way that you consistently get higher return. So there are only two ways to get to that FIRE: save more and keep earning a consistent return. Now I'll give one more example where someone is investing very conservatively. Okay, and they're not even getting 12%. They're getting only 10% post-tax. So can we just, make the changes in returns number, go down, the savings number. If you can just change it to, and bring the return down to 10%.
Ma'am, one request from the audience member is that a difference of returns in index versus active, that also she wants to understand, as well as the other members are saying 12 to 15% is reasonable.
Okay, fine. Perfect. So I'm showing one example. Okay, in case if someone is earning only 10%, then his annual saving number goes to 53 lakh. 53 lakh, growing at 10% every year. And that 53 lakh saving also growing at 10%. So year one, 40 years, 53. Then increase that by 10%. Then increase that by 10%. And at 60, with a 10% return, you hit that FIRE number. Now so I think people who are saying 12 to 15% is practical, I'll again change the return back to 15%. Yeah, go to 15%. Yeah, and what I will do is, if someone says, I will not increase my savings because I'm 50, tell me one number which I should be saving every year till 60. I will not increase it. So go and change your annual saving increment 10% ko make it 0. Say one scenario, okay, tell me one number, okay, 50 to 60. If I save that number, what is it? And make the return to 15%. Yeah, 15%. Okay. So now, if you want to reach 13.62 crore, or if you want to get inflation adjusted 2 lakhs per month, you need to reach 16.6 crore by 60. If your returns are 15%, and you're not increasing your savings, you are saving that fixed amount for the next 10 years, then you need to save 58 lakh rupees every year for the next 10 years. Okay, so this is how, you will go about. Now, what is passive and what is active? Say if you are putting this money in index or in ETFs, or it's passively managed, then it will earn you 15%. Okay, which is like the returns which market is given. Now, in case if there is active management and this return changes from 15 to 18, then you just see 58 lakh savings will come down so drastically. So now if we can just change the returns a little bit more. Yeah, if we can make, yeah. So now instead of 15%, if you earn 18% by good active management, then that annual saving number, which was 58 lakh, is dropped down to 49 lakhs. So you need to save less because there is someone which is helping you to actively manage the portfolio and get a higher return. Now, what if you earn 20%? Okay, can we just change this a little bit? Say if you earn 20%, then you need to save approximately 44 lakhs. So if you were just putting passively in index and leaving it for the next 10 years and earning 15%, then you need to save very high amount, which is 58, 59 lakh. But if you're really actively managing the portfolio and you're saving only 43 lakhs, but it's earning a higher CAGR, then you will still achieve that FIRE in 10 years. Okay. So I would just want to conclude, if there are any other permutation combination Chintan want and they're writing in chat, you can let me know. I'll make certain more changes. Otherwise, we will move on to the next thing that so we understood that what is that FIRE number. We understood that there is some savings.
At the age of 50, the investment amount, there has to be some corpus. So
exactly. So I'll show you. So you tell me, Dr. Pragnesh, what corpus of 50-year-old I'll assume.
Normally people save something, maybe 50 lakhs or maybe 1 crore, 2 crores.
Okay, perfect. So I will say someone is not starting at 0. He has already saved 1 crore for retirement. Okay, so change it to 1 crore. So if he is starting with 1 crore and again he earns a little higher on his portfolio. Yeah, if he earns say 20%, same I will take, he's actively managing and he's earning 20%. So the number drops from 43 lakhs to only 23 lakhs. Okay, at 20%. Now at 15%, just go if the return is only 15%, then in that case, he needs to save 42 lakhs. Instead of 58, because 1 crore is already done, it's down to 42 lakh. Now, someone has already saved 2-3 crores for retirement at 40. I'll show you one more number. Okay, someone has already a portfolio of, say, 2 crores. Okay, then at a 15% return, at a 15% return, his saving comes to 24 lakh, 2 lakh rupees. Mara paase 2 crore, I already have 2 crore at the age of 50, which I've accumulated. I need to now save 2 lakh rupees per month. If it grows at 15% also, at the age of 60, I hit the FIRE goal. But if I actively manage this and I earn a little higher return, so I'll assume, say, I'm earning 17, 18%, a little higher than the index. So then in that case, if you're earning a little higher, then your savings drop to only 12%, 1 lakh per month. Okay. So if the funds, if the returns which you're getting, if you can boost that returns, then in lesser saving also at 60, you will reach that goal. Now, another way to look at it is, okay, I don't drop my savings. I can save 1.5, 2 lakhs every month. Then you will reach FIRE not at 60. You will reach FIRE at 55, 56. The earlier, the better. Okay. So that is the whole concept of FIRE. The first basic of personal finance is fix your goal and fix that number which will give you financial freedom. Moving to the next thing. So now we understood how to calculate our financial independence number. Okay, now how do you actually go about investing your money, or what is that formula to create the wealth? So I will not get into how to reach like how to calculate, we learned. Now we will see how to reach that FIRE number. So if you can see wealth, which is your FIRE number, 13.6 crore, is equal to savings, which we said, okay, what I said, 2 lakh per month, 3 lakh, 4 lakh, depending on if you have done already something. If you have not done anything and you're starting from 0, then wealth or that FIRE number is equal to what you save. So that savings into 1 plus returns. So you need to consistently earn that 15, 17, 18, whatever we were talking about, and the number of years. The more the number of years, the more the wealth creation. So the only way of achieving FIRE or building wealth or building that corpus is keep on increasing your savings and keep on consistently earning returns. So now we will learn how to increase savings and how to earn returns. Okay, so this is that foundation of personal finance. So moving on to the next slide, whatever income we are generating, we have to plan our taxes in such a way that I can bring down my tax. If I earn, I bring down my tax, then my take-home income becomes very high. Now, out of the take-home income, what we have seen, lot of times people are not saving enough. Why? Because they are paying too much in EMIs. Lot of time doctors are building very big, hospitals or professional practice, bigger houses, and lot of their money goes in EMIs. So the thumb rule is that if you're earning 100 rupees, you should never take loans where the EMI is more than 30-40%. So restrict, if I'm earning 1 lakh rupees per month, my EMI should be 40,000. If I'm earning 10 lakh rupees per month, then my per month EMI should not be more than 3-4 lakh. So I will take loans or liabilities where EMI doesn't exceed 40% of my income. The second thing is, a lot of times we see I have money lying idle, so I'll buy a Mercedes, BMW, I'll get into very high flying lifestyle. So the one rule of fire is, while you are working, keep your lifestyle in control so that you can save more. So how do you control your lifestyle? You limit your needs and wants to 50-60%. And at least start saving 30% of your income and 30% of your post-tax income. So what is very important, that definitely we need to free up our time and focus on earning more, but we should have our tax planning in place. Okay, tax goes down and post-tax income goes up. Once the post-tax income is there, I restrict my EMI to 40%. I restrict my other expenses to 50-60, and I at least try and save 20-30%. So today in our FIRE number, we calculated what is our savings. So we calculated that we need to save 2 lakh a month, 3 lakh a month. Now do backward calculation. Okay, to save 2-3 lakh a month, I will need to earn 5 lakh a month, or I need to earn this much. And I need to file that much income tax return. Because if I file that much income tax return, then only I can pay my EMI, I can spend in needs and wants, and still have, if my saving is 2 lakh per month, then my earning needs to be 5 or 6 lakhs per month. So then you can do backward working, because a lot of time doctors say, please tell me how much income tax returns I'm supposed to file. Okay, so I tell them that if you're filing income tax return of 100 and your saving is 30, so you do backward working and figure out, okay, this much income tax return I have to file. Only then in white income can I save 20-30% of my income. So we understood in the FIRE, okay, saving should be 1 to 2 lakh. Then how much should be the income which we need to file? Okay, so moving on, how to achieve, the CAGR. So I told you, okay, 2 ways to build wealth. One is consistently increase savings and increase your returns, or get a consistent return. And the last was, so wealth is equal to savings into 1 plus a consistent CAGR raised to the power of n, number of years, the compounding. So 3 things. One is saving, other is consistent returns, and the compounding, the number of years you stay invested. So how do you achieve a optimum CAGR or a consistent CAGR? So the first thing is that you fix your asset allocation. 85% of investing success is investing in right asset class. But what people do, they chase multi-baggers. They do futures and options, derivatives, because they feel, I'll put this much, I will get that super normal 35-40% return, and I will reach, I will create a lot of wealth. So let me burst this myth that chasing multi-bagger stocks or, futures and options and derivatives, which you feel will give you like 30-40% return. Maybe in 1 or 2 years of good markets you may get, but in bad markets, you will also lose. So the objective of investing is not to chase 40%, 30%, 50% return. What is the objective of investing? Objective of investing is consistent return. And what I mean by consistent return, consistent 15, consistent 18, consistent 20, and consistently for 10, 15, 20, 30 years. I build my portfolio in such a way, I fix my asset allocation in such a way that I get that consistent returns. And when I focus on my profession, I save more and I earn that consistent return, then automatically I create wealth. So the formula for wealth creation is A, fixing your asset allocation. I will talk about what is asset allocation, regular investing, what I told you, every month, every year investing till that year when you achieve FIRE. And the third is C, letting that power of compounding. So in the wealth creation formula, saving regularly, okay, asset allocation, fixing your asset allocation, and C, the time, the power of compounding to work for you. So moving on, now we know what is my fire goal, what I need to save every month. Now, where should I save? Okay, so where should you save? Understand there are 4 asset classes. At the end of the day, everything, wherever I invest are linked to 4 asset classes. Like if I eat, then I am eating carbohydrates, I am eating fats, I am eating protein, right? These are macro. Okay, and then I'm eating like vitamins, minerals, and all that are micro. Okay, so in investing, if I were to talk in doctor's language, there are 4 macros or 4 major asset classes. So one asset class, if you can see on your screen, fixed income and bullion. Okay, anything which gives you fixed return and which helps you only earn a little higher than inflation, okay, is fixed income, and it is gold. So whenever you do FD, you put money in PPF, you put money in bonds, you put money in debentures, anything where you put money and they give you a fixed return. Okay, that is fixed income. Okay, what is a return of fixed income? Fixed income will give you little more than inflation. So I assumed 8% inflation, fixed income, and that I assume was a practical inflation to maintain the lifestyle. But if I were to go by the published inflation, 6%, 5%, then gold and fixed income will give you 1% more than inflation. Okay, but the other asset classes, which is equity and real estate, these are the asset classes which really help you grow wealth. So there are certain asset classes where you conserve or you preserve wealth and you only earn little more than inflation. And there are certain asset classes where you generate that very high return to achieve FIRE, what we talked about, 15, 18, 20. How can you consistently get that 15, 18, 20? By investing in equity and by investing in real estate. So equity and real estate are growth assets which help you grow your money and which help you reach FIRE early. And fixed income and bullion, gold and silver, are the assets which help you earn a little more than inflation. Now, if you ask me, oh wow, it is so good, we should put all our money in equity and real estate. Okay, and why should we do fixed income and gold? Because this is only earning me such high return. So when I go to the doctor, I tell doctor, wow, I have to reduce body fat and I have to like maintain my BMI. Then I should eat only protein. Okay, it will not work. How much ever I want to lose weight very fast or lose fat very fast, I should go on a very high protein diet, reduce my fats and reduce my carbs. I can do it for 1 year, 2 years. Do you think I can do it for lifetime? It is not practically possible. Okay, because what I am looking at a sustainable fat loss, and that to stay for life. So same way, when you are investing, you need to look at earning a sustainable or a compounding return for a long period of time. So how do you decide, okay, when should I put money in fixed income? When should I put money in gold? When should I put money in equity? When should I put money in real estate? So I will say, okay, there are 2 buckets. If your goals are very short term, okay, you are 50-year-old and you have a son or a daughter who wants to go for higher education in 2 years. So that is a short-term goal. In 2 years, markets can be very up and down. So in that case, you will put money in fixed income. Okay, you have a child who's going to get married in say 5 years, 7 years. And, when you are getting married in India, you give certain gold to your, daughter-in-law, anyone, right? So it's a medium-term goal. In 5 or 7 years, I need to be giving gold on my kid's marriage. So it's a medium-term goal. So I will stick to, so these are my short to medium-term goals. So if any goals are within 5 years, then you stick to fixed income or you stick to bullions. And if you have goals which are 8 years, 7 years, 10 years, anything more than 7 years, then you can look at equity and you can look at real estate. Okay, that is how you decide what assets I want to get in. Now, in the FIRE example, the doctor is 50. He wants to attain financial independence at 60. His goal is 10 years away. So what is the best asset allocation for him? The best asset allocation for him is equity and real estate. Okay, real estate is not liquid. We said, okay, we need financial assets. Okay, so he should be looking at equity. But having said that, to balance, he can also look at a little bit of fixed income, a little bit of bullion. Okay, so constructing the portfolio depends on what that FIRE number is, what is your expected return, what is the time which you have to reach that goal, what is your risk-taking ability. Like Dr. Vibhakar initially mentioned, I can earn higher returns by taking very high risk. But the objective is to control risk and still earn a very good consistent return. So that can happen when you fix your asset allocation. So if you want to take one takeaway from my presentation today, please go and make your asset allocation. If I have 5 crore with me, 3 crore with me, 10 crore, whatever is my net worth today, how much is in fixed income, how much is in gold, how much is in equity, and how much is in real estate, please find that out for yourselves today. Okay. And if this asset allocation is not balanced, then you should definitely book a session to figure out what your right asset allocation should be. Okay. So moving on to first understanding what is that FIRE number, then, how do we save? How much do we save? We reduce taxes, we control EMIs, we control the needs and wants, we push savings. Now that savings, we fix in a right asset class, okay? And then we let the power of compounding work for us, okay? So what is the rule of 72? Like I said, okay, expenses, if inflation is 8%, and 72 is the multiple, then 72 divide by inflation, 8% in 9 years, your expenses are doubling. Okay. So if I'm a 50-year-old doctor, my expense today is say 1 lakh rupees per month. Then in 9 years, when I turn 59, it will become 2 lakh per month. If, in 18 years, it will become 4 lakh. So expenses are doubling every 9 years with the rate of inflation. So 72 divide by 8%, which is the inflation. In 9 years, my expenses are doubling. Okay, so now how should I make my investment? The power of compounding is there in inflation. So the power of compounding should also be there in your investments. So in investments, again, remember the rule of 72. 72 divide by the rate of return. So I'm taking 15%. If 72 you divide by 15, 5 is a multiple. So in number of years in which your money doubles is 5. So say if you are investing today 1 lakh rupees per month and you're earning 15%, then 1 lakh becomes 2 lakh in 5 years. 2 lakh becomes 4 lakh in another 5 years. 4 lakh becomes 8 lakh. So in 15 years, your 1 lakh became 8 lakh. And in 20 years, 1 lakh becomes 16 lakh. 16 times. Okay. So understand the rule of 72. The compounding is there in expenses. And so compounding should also be there in your investments. Now, a lot of time people do investments. What happens? In 5 years, their money doubles. I bought mutual funds. I put, say, 1 lakh rupees, it's become 2 lakh. Oh, double thing. Yeah, I'll remove the money. But if I keep it, then in the next 5 years, it'll become 4. If I still don't remove it, it becomes 8 and then it becomes 16. So a lot of times our Indian markets is giving consistent 15% return. But when I ask people, okay, 20 years back, you invested 1 lakh, is it 16 lakh now? So they say, who kept for 20 years? One bad day in the market, one bad news, government getting shaken up because of election results or whatever, I redeemed the portfolio, I exited. And I'm waiting, oh, now let me see what happens, coalition, what government, then I will put again, okay? All that doesn't work. You're breaking that whole power of compounding and not letting it work in your favor. Okay, so I will say, don't get into buying low, selling high. All that is not practical. Keep on consistently investing for 1 year, 2 year, 3 year, till you have not achieved FIRE. You have to invest. You have to stay invested in the asset class which you have intended, and only then you will let the power of compounding work for you. Okay, so I want to just say we are already at 5 o'clock. So we are an hour into our session. I would just want to conclude that how would you start today? First, you calculate that what is your and your family's current net worth. Like Dr. Pragnesh said, nobody is at zero right now. We may have 1 crore, 2 crore, 3 crore, whatever is that number. Understand what is your current net worth. Understand how you've made investments. Joint account, demat account, is it joint, individual? Do you have nomination? Do you have beneficiary in all your assets and investments? Okay, so that is what you understand. And then I'll not get into insurance discussion. What you need to then understand that what is the asset allocation? Whatever is your net worth, how much in equity, how much in real estate, how much in fixed income, and how much in gold. And you need to have all four of them. One is good or one is bad. It's not like that. You have to fix the right asset allocation. After fixing the right asset allocation, decide what amount you can save every month. Whatever is that amount now, as per your current asset allocation, where should this investments go? Should it go in equity? Should it go in fixed income? Should it go in gold? Should it still go in real estate? So that you need to fix. And then once you fix asset allocation, how much in mutual fund, how much in shares, how much in, then we'll go into security selection. So in the following sessions, we will also discuss how to construct portfolio. Today, I want to leave you with this thought. Okay, if today's session ends, what is a homework which you need to do? The homework you need to do is figure out your current net worth, figure out your current asset allocation, calculate your FIRE number, and calculate what do you need to save to get to your FIRE number. I have Mr. Chintan Dudela on screen right now. Chintan is from IIM Ahmedabad. He heads our, operations in Ahmedabad, and he and his team will be helping all of you all to calculate your FIRE number and to calculate, how much you need to save. Even if you can't figure out what your current asset allocation and all is, they are there to help you and guide you. So moving on, like I said, that the first thing I promised you, okay, six pillars of personal finance: goals, then your cash flow, taxation, investing, insurance planning, your loan, becoming debt free, and last was estate planning. Now, where do you stand on this six pillar? What is positive for you? What is negative for you? On your screens, you all can please scan this QR code. Once you scan this QR code, there will be one quiz which will open, and in 5 minutes, you will know your financial fitness score. Like when I get to the doctor, he says, BP is this, he says my weight is this, my height is, and he comes to know my health score. Okay, what is our health? So same way for you to know your financial fitness score, you all can just scan this QR, which you can see on your screen. A small quiz will open. It will take you less than 2 minutes, but it will give you a diagnostic report that today, what is your financial fitness? And once you know that report, you will know which area to work. Should I fix goals? Should I fix my cash flow? Should I really plan my taxes? Okay, my tax goes down, but my income which I'm filing goes up. Okay, am I actually properly, adequately insured or not? Have I done my estate planning? Have I planned my investments? It will go to my family members. And do I actually understand what does it mean to become loan free? So I'm giving you all 2 minutes time. You all can scan this, start answering questions. If you do not understand any question, you can put it in chat box. Chintan is there. He'll read out and he'll help you understand that question. So 2 minutes to take this quiz and to get your financial fitness score. I hope the scanner is working for everyone.
Advari sir, in meantime, you want to add something?
Yes. Okay, even the link is posted in the chat of YouTube for you to click that and take this quiz. If you cannot scan from the screen, then the link is posted on your YouTube chat. Click that link and you will be able to take that quick quiz. Yeah, any questions, Dr. Vibhakar and Dr. Pragnesh,
Sir,
why
unmute yourself.
people are doing this?
Advari sir, unmute yourself. Yes.
My question was that isn't it that in last few years the investment in real estate, especially in metropolitan cities, has gone down vis-a-vis what it used to be 10 years, 15 years back?
Yes.
And how much can you rely on real estate as an investment?
Yeah, so
leave aside the liquidity difficulty of it, but the real estate these days doesn't give you that kind of a return.
So I completely agree with you, Dr. Vibhakar, that I will only invest in real estate for my primary house where I'm going to live and where I'm going to practice. Over and above that, I'm not really looking at real estate as investments right now because, like you rightly said, liquidity is a concern, and the rental yields, the property prices have gone up so much. If I buy also, capital appreciation I may get in future, but I'm looking at a regular income also. The rental yield is also so low right now. Okay, it cannot generate you that 15-18% consistent CAGR. And towards the end, I'll share one slide also that how much even that percentage point difference in equity and real estate can have a big impact in your net worth in future. Like we feel that real estate is giving us or has given us very good return. But 20 years, if you calculate the CAGR of property, then it is not what we feel it is. So I'll show you one slide where I have calculated CAGR return of the top properties in Bombay over the last 20-30 years. And to my surprise, absolute return was very high. But when I converted to a annualized return, it was not even beating equity market. So it was just a number ke absolute, oh, I got so much. Okay, but actually equity market consistently have given more. So we took an index example of 15%, but I'll show you exactly how much returns the 4 asset classes have made. So we'll talk about that. I hope everyone is taking the quiz and you all would have got some score. You all can put the scores in the chat box. Okay, what scores you all have got? Yeah, Chintan.
They will take 3 to 4 minutes. The link is being pasted there.
Yeah, sure. So you all can just start taking that quiz. And if any questions you have in the quiz, you can ask us.
Yeah,
Yes,
my
Dr.
message to the viewers at that time is we are going to have more sessions on this. So don't worry about it. Work out and I think what we can do to make it this more interesting is we can discuss some live cases. We doctors are used to discuss live cases. So we can have some 4 or 5 financial situations, the real life situation. We will not diverse the name. And then you can provide solutions, so that will make things more interesting.
Perfect.
Before the next session, we'll collect cases.
Perfect. So even today
that helps people to understand in real life scenarios what is happening.
Right. So you all can put some real life scenarios in the chat also, and we'll float a questionnaire or something where people can really like share kit, this is what they're facing and what would be the solution for it. Say if the asset allocation is not proper, their savings is very less, their EMIs are too high. So how we can really structure.
We'll try to take cases from various ages, maybe someone nearing to retirement, somebody who's already retired, somebody maybe starting to practice. So we can have a bunch of them and then you can provide a solution. So that will, I think, give more clarity and be more practical.
Definitely. And today also we try to restrict the presentation to less time so that on whatever we discussed today, you all can ask as many number of questions or real life case studies or any situations which you want us to discuss. So still a minute or two.
End of the day, the question comes is, kal kaun sa script lena hai?
So Dr. Pragnesh, like I said, right, कि मैं कोई अच्छा स्क्रिप्ट ले लूं और वो मुझे बहुत ही रिटर्न दे दे. But will it still earn me that consistent CAGR for 10, 15, 20 years? Okay, तो वो multi-bagger if we chase करेंगे, कुछ पैसा डालेंगे और उस पे बहुत multi-bagger भी रिटर्न मिलेगा. क्या हमको वो 14 करोड़ पे लेके जाएगा, 12 करोड़ पे लेके जाएगा, 11 करोड़ पे लेके जाएगा? So keeping that eye on that bigger picture and earning that consistent return is more important. अगर उस पे फोकस करोगे तो वो multi-bagger को chase करने का कुछ जरूरत नहीं होगा. So,
according to me, I feel that much more important than when to invest is when to disinvest. That is going to be more important.
Yeah. So in my session, when we will learn the portfolio construction, we will talk about even this point, ki when is it that you should exit that investment? कि कब वो exit करना है? I am not taking it, particularly here. But we'll take it in the subsequent sessions. It's a very good question.
Yeah. I think, should we conclude this session today?
Yes. So I think we gave you 1 or 2 minutes. If you all have finished like this, taking the quiz, you all can please, put your, what is your score? So I want to just say, it does not matter what your score is. What we discussed today, fixing that financial independence number, understanding asset allocation, deciding on that what number you will save every month, and then investing it properly in, the 4 asset classes and earning a consistent CAGR. Okay, that will help you score 20 on 20 going forward. And like we said that there's a qualified team which understands all 6 pillars. And whichever pillar you feel is not working for you, we will help you fix. So within a 1 to 3 years, if you do your financial fitness planning very well, then you achieve a 20 on 20. Now, coming back to Dr. Vibhakar's particular question, okay, real estate has not been giving good results, or it's a myth, okay, I made too much money in real estate. That is all absolute return. So I'll show you one data and one slide for that, and then we are good to conclude for today. If we can just go to that. Chintan, I am not connected on YouTube, so you'll have to see questions and just guide what people are writing.
So mostly people were satisfied with the content we have covered. They have additionally requested, and we should also have a specific case study or a session on, especially for senior citizens.
Perfect.
Because they have a different kind of financial situation and
So
problems.
they would have created a corpus now how to earn a regular income out of it. Correct. So we should do one session specifically focused for senior citizens. Very good feedback. And sure, we will speak to Dr. Pragnesh, and towards the end of the series, we will plan a session only for senior citizens. Yep. Okay, so now I will give you this
definition. The definition of senior citizens would be above 60 or 70, because then they are going to be super senior citizens too.
So I guess about 60, 65, where they have already created a corpus. Now, how should they handle that to get that regular inflation adjusted income? I think this is what people mean.
One can only think of retiring when they've got some decent corpus. Otherwise, till they are younger, they are not senior citizens.
Yes, exactly. So people who have reached that fire number, they are senior citizens, and now how to invest that to earn regular income, I think we'll do a session for that. So now coming back to Dr. Vibhakar's question on like real estate returns. So I've just taken an example. Okay, you invested 1 lakh rupees in 1979 in fixed deposit and you earned a 8% return. Okay, then in right now in say this many years, your money in fixed deposit would become, that 1 lakh will become 29.5 lakh. Okay, so 29 times the money has grown what you put in fixed deposit when the CAGR return is 8%. Now we will look at gold. If say you bought gold 10 grams, 1 tola in 1979, that time the price of 1 tola was 937 rupees. Today, ये data भी मेरा few months old है, so it is 60,000. Now the price of gold has become 75,000. Okay, at a 9.9% CAGR return, 1 lakh invested in gold today would be 65 lakh. Okay, so gold has grown 64 times. Okay, now the next is real estate, what sir was saying. So I have taken an example of Samudra Mahal. If anybody in Mumbai knows, it's one of the prime properties in Mumbai, Worli Sea Face, Samudra Mahal. In 1979, per square feet rate of Samudra Mahal was 700 per square feet. Today, it is 1,35,000 per square feet. Okay, so absolute 1 lakh invested is 2 crores. Okay, but what is CAGR? CAGR is only 13%. So I can say it is increased 200 times. Okay, but what is CAGR return? It is only 13%. Okay, now same in 1979, if I invested this 1 lakh in Sensex, in index started at 100. Again, this data is a little old. It is 69,000. Today, I think it became 70 to 73,000. Okay, the CAGR return is 16%. So 1 lakh invested in 1979 in Sensex today is 7 crores. Okay, it is 700 times. So what Dr. Vibhakar was very rightly saying, okay, we have this thing, okay, if I put money in real estate, it becomes 2 times, 5 times, 8 times, 10 times. So if I put 1 crore, it became 3 crore, 5 crore, 8 crore. It's all absolute return. When you put, and when is that money growing? Annualized return, CAGR. And now you see, we feel what 2%, 3% return can make a difference. But you see 13% and 16%. Do you see the end result? 1 lakh is 192 and 1 lakh is 7 crore. Okay, so 3% more in the long run can make a huge difference in your end goal. And so we say, okay, don't try to be a DIY and try to manage things on your own. What happens is you are like not giving enough time to your profession because you're trying to do things on your own. Instead of that, focus on your profession, earn more, save more, and work with an expert team which will help you to actively manage and earn a higher CAGR, because a little higher CAGR can make a big difference in your end goal. Okay, so this is what the 4 asset class. So Dr. Vibhakar, I hope I answered your question. Okay, don't be in a myth. Okay, real estate is very good, Okay.
Yes, sir.
So coming back to does not matter what your goal is, like what your score is. If you make a financial fitness plan, you can improve your financial fitness. So there has been Finnovate has been working with doctors for more than a decade, and there has been a lot of senior surgeons. If you can see on my screen, some Padma Shri award winners and very, very marquee doctors who have joined this mission on us to achieve FIRE. We are putting a link of this. If you want that personalized session for you to calculate your FIRE, to figure out which 6 pillars may which pillar we need to work on, to fix what. Say if you have some lump sum, how do you go about investing? Or if you want to fix your asset allocation, then you all can click on that link which we are posting, and you can book a appointment with Chintan's team for a personalized session. Also, there is a link. You can even build your financial fitness plan on your own by clicking, and then you can book a session with us. So there is a very big network of doctors who are with us to achieve their FIRE. So our whole objective is that doctor-patient ratio is not good. We want doctors to get free of financial worry and free of money, so that only they can focus on practice. And that is our way to really work with them to free up their time and to free up them of money worries. So they focus on what they love to do the most, is care for the patients. Okay, so with this, I would want to conclude, and we leave it open for question and answer for everyone who has attended today's session. There is a short book which we have created on how to achieve financial freedom. Everybody who's attended today's session, please complete your registration if you have not done. Everyone who completes that registration will get this complimentary ebook from us. Whatever I discussed today is compiled in an ebook, and we'll be sharing that ebook with you. Okay, moving on. I guess we'll leave the floor open for question and answers. Okay, so someone has returned.
We are running out of time.
Yes,
we are running out of time, so we'll maybe take questions later.
Sure. Okay, thank you so much. I think people are writing some questions on the YouTube chat. You all can continue doing that. We will respond back to that questions.
Yeah.
Sure, we'll get back on this.
Yes.
Thank you so much, Dr. Pragnesh, Dr. Vibhakar, and to the entire association. I hope it was as much as joy it was for me talking to all of you all. Thanks, Dr. Pragnesh. All over to you.
Thank you, ma'am. That was a very nice presentation and quite elaborative, and a lot of information has been shared about the structured financial discipline that doctors should be. And as being a doctor, we always advise regular health checkup for our patients. I think financial checkup regularly for financial fitness is also important. So that was a good beginning of the series, and in the coming the lectures, we'll be covering more and more topics, and we'll keep it like interactive. We'll try to have more audience on Zoom, so we can have one-to-one interaction in the upcoming sessions. That's what the suggestions we are getting as of now. Thank you everyone for joining. Thank you Advari sir, thank you ma'am, and thank you Chintan Bhai for supporting this session. We'll keep connected. Thank you friends for joining this session. Keep connected, and you can share this. The recording of this session is available on the same link as already being circulated as the audience link to you. So you can share this link to your friends, family, and relatives who can again get benefited from this program. Thank you everyone. Goodbye. Have a good evening.
Thank you. Good evening to everyone.
Thank you.